Hey folks, Bob Desmond here over at the Contrarian Trader, and welcome to Best Stock Charts for the coming week. So what we're going to go over today is, one, some housekeeping. We're making some changes. I'll go over those changes. Two, we're going to go over our trades that we took off the table last week. Three, we are going to talk about the stocks that we like for the coming week. Let's begin with a conversation with regard to what's changing. What's changing is this. I like the live format, meaning YouTube Live, Facebook Live. I'm trying to get accustomed to it. It's really strange. I mean, I make these videos and I spend literally a half hour to 45 minutes editing them. If I could reduce that amount of time editing, that would be great. Also, the live videos, it allows me to engage people more, ask questions, get responses. If people want to request a stock symbol for me to review real time, I can do that. I want to engage more. So if you have thoughts on that, please leave a comment below. Especially if you watch this on YouTube, I'll get alerted and I will respond to you. So please give me feedback. If you watch this on Facebook, especially if you're in the discussion group, leave me feedback and I'll adapt, I'll change, because you guys are in charge, right? I'm doing this for you. So please let me know what you want, please. Also, what I'm going to be doing is I'm going to do a month ahead commentary, meaning the month is now over. June is in the books. What I'm going to be doing early next week is the month ahead commentary. That is going to be available for Facebook discussion group members and members of the Contrarian Trader only. So if you're not currently a member of the Facebook discussion group or not currently a member of the Contrarian Trader and you want that month ahead commentary, what I'm seeing, which occurred and what I believe is going to happen over the course of the next month and months, sign up for either A, the Facebook discussion group, or B, become a member of the Contrarian Trader. If you're new to watching me, if this is the first time you're watching, please don't join up to become a member. I would love to have you. I would prefer first that you learn the type of trading that I do. Many don't get the macro picture and they just want trade alerts and they don't get me. I think that many need to go to the trade alert services out there that, you know, they market like you can't believe. I wish I had the marketing budget they did. I could retire. It's crazy. I am not going to lease a Lamborghini, nor buy one, nor rent one and put it in a video hoping that you're going to join. I don't do that. That's not me. So if you're into that type of trade alert services, I'm sure you're being marketed all the time by them. Join. You probably need to get your hand burnt, as most do. That's why they charge on a quarterly basis or yearly basis. They don't charge on a monthly basis. Notice that, because nobody's going to sign back up for that second month. I keep members longer term. I go month to month. That's how I work. If you want to get a discount on the yearly, great. That's fine. So back to the discussion. If you want to become a Facebook group member, it's free. Simply, if you watch this on YouTube or on the website, you should get it as well. There should be a link that's appearing above. Please click that link. It'll take you over to the Facebook discussion group. You won't lose this video. It'll open up in a new window. It'll request that you send an invite, answer a couple of questions, and boom, you're in like Flint, okay? So do that now, please. I'll take a moment. Thank you very much for doing that. Okay, and let's get now into how is our week? How much money did we make last week? First off, I think if I answered that question, it's really not cool, right? It's just not what I do. We had a really great week last week. If you need me to sum up into a word how good of a week it was, despite the volatility in the market, I can put it this way. How much money did we make? Because this is a family-friendly show, folks, right? You probably have kids in the background, so I don't want to say the word. How much money did we make last week? It was good. It was really good. So I'm going to go over those trades now really quickly. I'll do other videos on these trades, why I got in, why I got out, what was I seeing, but real brief, let's go through them, okay? Amazon, this was a quick intraday trade. I rarely do them, but just the way that it worked out. We got short of Amazon right here on the 28th at $16.96 per share. And we booked a quick profit. We pulled back to the 50-period moving average, and that was acting as support. Why fight it? It was probably going to rally back. We had broken out of one resistance level, challenged a second, pulled back. In all probability, we're going to rally into short covering Friday. I didn't want to fight it. We booked profits. We moved to the sidelines. The next stock we booked profits on was Cal-Maine Foods. Now, Cal-Maine Foods, we'd had held for quite a while, and we bought it. We bought it here on the breakout of this pennant formation on the 29th of May. Nice rally higher. We booked profits here. We were down on the session, and I said, you know what? The market's coming under a lot of pressure. Commodities aren't working. Nothing seems to be working except for oil. So I said, you know what? Let's book profits here. Let's see whether or not, and I even said it on Market Wrap that night. I said, you know what? I'm probably going to regret this, but something told me to get out. So if we had broken out, I would have bought back. But I didn't want to take the risk. We were at resistance. We had stalled out. And thank goodness that we did. Something told me to get out. And we got clubbed. I didn't see any news on this. If somebody knows anything about Cal-Maine Foods, what this news was, let me know. I took a quick look. Nothing was out there. And I'm rather surprised that it wasn't just one day. It was 2 days worth of selling. And I'll be honest with you, I love the company. And what I'll be looking to do is buy the shares back. But right now, we are still testing the support level. I'm not ready to go buying yet, despite the pullback. But I will be looking for a good entry point. So if you like the shares, follow me, and we will track them. Well, actually, you need to be a member to do that. But if you like Cal-Maine Foods and you're a member, request it. I'll keep track of it, and we'll move forward. So what else do we have? Goose, Canada Goose Holdings. Now, on a daily chart, I like this setup. I didn't buy it for the daily chart. I bought it for the 2-hour chart because we had pulled back. You'll remember, I was bullish back here, huge rally, and I said, you know what? You got to get out of this thing if you're long. You got to book your profits. You got to make them real, right? Sure enough, hammered. Now, why I got long was because we broke out of this pennant formation on a 2-hour chart, and we rallied. And I booked profits quickly. I wanted to see whether or not we'd get a close on a daily basis outside of this resistance level, and we got it. Now, on Friday, we saw topping action. That's a kind of a concern, right? That means that there were sellers moving in, selling strength. So that means that these buyers here, the people who bought back here while the shares are very extended and who are now licking their wounds, they just want their money back, right? So now the shares have overhead supply, meaning prior buyers who bought wrong, very, very wrong, they got burned. And while I was saying sell, they were buying. They weren't listening. And they want their money back. Simple as that, right? Supply and demand. So late day Friday, you had more sellers than there were buyers. The shares came off the highs of the session. I think that longer term, we're moving higher here on KTOS. If you bought it last week, you're fine. Just use a stop right below last week's lows of 56.22. That's what I would do. I can't tell you what to do, but that's what I would do. Netflix. All right, so Netflix, on a daily chart, you could see was in a triangle formation, right? I don't like Netflix. I like the product. I don't like the stock. I just don't. I think there's so much competition out there. I think that Amazon is really ramping up their video service. I use Amazon's Prime video service. I also use them to rent videos. Honestly, I think that Netflix is susceptible to competition, especially YouTube, which is coming online now with paid programming, okay? So be that as it may, right? Netflix is still the dominant player. I get it. However, I don't like the stock. So as a matter of fact, I'll tell you the macro reason why. Simply go to the monthly chart, take a look at RSI on a monthly basis. We were higher, but we closed out the month of June at 89.59, almost 90 on a closing basis on RSI. You want to talk about a stock that's extended and it was tapping the third standard deviation Bollinger Band on a monthly basis? This stock is extended. And now on Ultimate Oscillator, take note of the fact that you're putting in lower highs, okay? That's not why I shorted it. But it is why I will be shorting it yet again. I will be watching. So back to the daily chart. We're seeing signs of weakness. Stokes were rolling over. RSI lower highs coming off of overbought levels. Then we started watching the 30-minute chart. What did I short it? On the 26th, excuse me, on the 26th of June, we shorted it at 399.28. So right here, as we rallied up and into the declining 50-period moving average, okay? That's a natural resistance level. So we shorted into that resistance level. And by the end of the day, we're feeling good. We're up on the trade by a couple of points. It's great. But the next day, President Trump tweets and the markets rally, right? So I said, okay, what are we going to do here? We weren't aggressive with our short. We had more capacity to allow this position to become a larger position relative to our overall portfolio. So what I did was I took out my crayon. I drew a resistance level from point A, 423.21, to point B, 420.50. I extrapolated it down, and I said, here is our resistance level. That's where I'm going to short. And we added to our short at 411.22. Almost smack dab on the button. Honestly, I mean, for a stock that was trading over $400, we were off by 30 cents around there, off the highs, a rounding error, okay? A really good entry point, and the shares just moments later just fell apart. So we booked profits on this one, and we scored big time on Netflix last week. What else did we do last week? I went over Goose. Oh, EDC. Let's go over EDC. All right, so here's the chart of EDC. We opened up a position on June the 25th, right here at, what was it, 89.86, and we booked profits at 91.21. And thank goodness that we did. We didn't stay long in this trade. We booked our profits, moved to the sidelines. I was worried about the dollar. The dollar continued to show strength. If you watch the dollar relative to EDC, EEM, all the emerging market trades, they trade inversely of each other. We were aware of it. We respected it. Therefore, we didn't stick around, and thank goodness that we did. We took advantage of an oversold condition. We knew there was going to be a bounce. We got the bounce. First out, best out. Moved to the sidelines, and the shares just fell apart. Now, I like EDC. I think the dollar is done. I think the dollar is done going up. And in all probability, we're going to get a pullback, and you're going to see emerging markets rally. Also, I think that gold is going to rally, as it did on Friday. I've been saying it for a while now. I started pounding the table late last week about gold, silver, the gold miners. Look at them, watch them. The dollar's topping out. Sure enough, bam, Friday hit. We'll go over that in a moment. So I think that was it from last week. So the last trade that we took off the table last week wasn't a profitable trade. It was Cure. We bought it right around here at about $47 per share. And I said, you know what was our stop on this one? 46.20. It got triggered. I'm looking at my whiteboard right now. 46.20. We got hit on that stop. I believe it was on the 27th, and the shares just continued to drop. Yeah, they bounced back on Friday, but we closed well off the highs of the day. Would I be a buyer here? No way. If we break out above the upper band of resistance right here, sure, I'll get back involved. But as it stands right now, no. I think we're going to pull back and retest the lows of last week yet again, either this coming week or the following week. So I like Cure. I think that longer term it's going higher. Short term, though, it's dead money. I wouldn't go buying it on Monday morning, okay? Wait. Allow it to consolidate. If you're a member, you want me to watch it, enter the symbol on the ticker cloud, and we'll track it, okay? Okay, let's walk through the trades that we're looking to trade next coming week. OCLR is Oclaro Inc. take my crayon out here. Why do we like it? Here's why. What we're doing is we're identifying our support and resistance level and the pattern that we're looking at. We have a triangle formation. So what we want to do is we don't want to buy simply based upon the formation. It's a continuation breakout pattern, yes. We do have a double bottom setup here, yes. Can you buy these shares? Sure, but I would stay really small. This is a weekly chart. I like the bullish reversal week last week. Always label your charts and keep them, folks. Very, very important. I have thousands of annotated charts. Simply take a look at all these chart lists. Most have 500. They max me out at 500 each list. All right, so OCLR, weekly chart, triangle formation, a bullish key reversal last week. I always want to take a look at volume. Volume was light, no institutional demand, but we had more buyers and sellers last week. That's a good thing. We have an upper band of resistance here. If we close above it at about $9 per share, $9.20, it'll probably rally up to the prior highs of $11.30. Nice trade. If we break out above it, I would stay long. It's going to go a lot higher. Stokes appear to be putting in a double bottom setup. Very, very bullish. So we like the shares of OCLR as a long. Members, we're going to talk about all of these potential trades tomorrow on the week ahead commentary. That's only for members. You need to be a member of the Contrarian Trader. And that's where we do our analysis of the health of the markets on a daily and weekly basis. Where do I think we're going short term? And what trades do we want to put on to trade in the general direction of the sectors which should do well? That's what we're going to be talking about tomorrow. Now, I spoke about EchoStar Holdings a few weeks ago, and I put up all of these resistance levels and support levels, and I said at that time, $45 per share, I thought we would come down and hit. That was several weeks ago, and sure enough, we hit it. Not last week, but the week prior. And last week, we sliced through it. So it's actually going to go lower. Where do I think it's going to go to? Right down here. $43 per share is probably where it's going to go next week, if not the following week. We'll look to put on a trade, and I'll talk about an entry strategy either tomorrow or midweek next week with members. Next chart up. KTOS, KTOS Defense and Security Solutions. I like the setup here. We have a triangle formation, Stokes rising, RSI above 50, a bullish key reversal week last week. How is volume? Light, okay? So while it was a good week price-wise, more buyers and sellers, no institutional demand yet. So we like KTOS. Next chart up, CVX. All right, so I'm going to be talking a lot about energy. Energy is moving higher. And think about it. Oil is moving higher with a strong U.S. dollar. Why does that matter? It matters because the price of oil is priced in U.S. dollars. Think about, here's an analogy. Think about gold rallying without geopolitical risk. No geopolitical fear. Gold rallying with the U.S. dollar. Now, granted, the correlation is not as... It's not apples to apples, okay? It's more orange to tangerine, meaning the price of oil can trade with the dollar. It's not going to stay long doing that. One of them is wrong, and it'll revert to the normal inverse correlation. Now, with gold, it's very rare that you see an inverse correlation unless, of course, there is geopolitical risk. So, oil is moving higher. Think about if you had a weak U.S. dollar, how much higher oil would be going. So the dollar's weakening. What do you think is going to do well in the coming weeks? Oil, energy, CVX, Chevron. We are setting up here very nicely. It's not a buy yet. Soon, though, I send out trade alerts to members. We are poised for a breakout on this weekly chart. Stochastic forming a double bottom setup well above 50, a higher low. Good stuff. Very good. We're waiting for a breakout in RSI. Volume last week a bit light, but the prior week's volume, institutional demand. The next chart up is DIG, another energy play, right? So we're getting the theme here. We love energy. Energy's looking good. Now, DIG is a leveraged ETF, okay? Not for the faint of heart if you don't like volatility. There are other less volatile funds out there to put you long of energy. But in this case here, DIG is on my screener. Let's talk about it. We are in a wedge formation, very close to a breakout. Stokes are beginning to hook up. We have a higher low on RSI, double bottom setup. This is a nice chart here. Volume rose last week relative to prior weeks, yet it was still below average, okay? Volume matters, so no institutional demand yet. But we look poised to break out here on DIG. Encana, weekly chart. Energy, again, right? We broke out right here the week of April the 16th, consolidated, retested the week of the 4th, retested the breakout point. So what was resistance was then support. It held. Traders are OCD, obsessive compulsive disorder. I know I have it, okay? I love retests. And sure enough, it consolidated, rallied last week. No breakout yet, but we're very, very close to a breakout. We have rising Stokes, rising RSI, volume, just shy of average, but good enough for government work. So, Encana looking good. Suncor energy again, right? We are in a triangle formation, a bullish reversal week last week on the candlestick. Volume, outstanding. Outstanding volume. Institutional accumulation on Suncor. Stokes, they're above 80, but they could stay above 80. All right, so please don't worry about the Stokes. Worry about the price action. It looks like we're moving higher here. We have a double bottom setup and rising RSI. We're looking for a breakout on RSI. Suncor is looking good. Freeport McMoran. All right, so now we're going to segue away from energy and we're going to talk about metals, okay? Freeport McMoran, copper, gold, silver. I mean, they mine everything. Big company, huge player, and they really ripped higher on Friday. Let's go to a weekly chart. Okay, weekly chart. We have a nice consolidation on RSI. No breakout yet. Sometimes you get RSI that leads the breakout on price. It happens all the time. But we don't have that yet. Okay, so don't trade off of that. We're still in a consolidation. No breakout yet. Last week, we pulled back, retested the lower band of support, and flashed a bullish key reversal. I think that these shares, if you wanted to scratch the itch, you wanted to buy them, fine. Scratch the itch. Small position. Then, on the breakout and the close above this upper band of resistance, then I would buy the shares. Volume last week was very good. Now, I said to scratch the itch. Let's go to the daily chart first. Check out the daily chart. See how we closed. All right, so I wouldn't buy them on Monday morning, okay? Because we closed right at resistance. We were above it, but we couldn't close above it. Why? It's because buyers who bought during this rip here, this rip here, this rip here, have sat through this correction. They want their money back, okay? Simple as that. Because we closed off the highs of the day doesn't mean it's a bad stock. It means that you have sellers who are licking their wounds and regretting their buy. They want their money back. They're not looking to make a penny. They just want out. So you're going to see some backing and filling here. Eventually, those people will be gone, and then the shares will move higher. The GDX, okay? I like the GDX. I like the GDXJ. I own NUGT. I wanted to buy more on Friday. I couldn't. I'm going to talk about it with members tomorrow about what we're doing with the NUGT trade. It was net a good week. Let's talk about the GDX. They look the same on the charts. Weekly chart GDX. We have higher lows getting put in on RSI. There's a problem here, right? We've been trading down. But last week, we flashed a bullish key reversal. Same deal on the GDXJ and NUGT. I think that we are breaking out very, very soon. I think the wheels are coming off the tires of this global economy. Last week, the yield curve on the global economy. There is a yield curve for the global economy, and it went negative. It inverted. That's bad. That's a lot of fear and a lot of problems out there in the global economy. Our yield curve hit a new multi-year low last week. I think the spread on the close was 33 basis points on the spread between the 2-year and 10-year Treasury bond. We haven't been that low since, guess when? 2007, folks. What's going to do well in crisis times? You better own gold. You better own the gold miners. You better own silver. I said this last week. Now, the last chart we're going to leave off here with is Broadridge Financial. Now, I'm not loving the financials, but Broadridge has still got some momentum. But there are warning flags on the chart. So we're putting up our chart art, and yeah, this is a problem. All right, so we'll begin with the positives, and as I'm talking about the positives, think about what negatives I'm looking at right now on the chart, and if you can guess what they are, enter a comment below if you watch this on YouTube, and let me know if you see what I'm seeing here. But on a price basis, before we talk about the indicators, I see positive action. You may be saying, Bob, it closed down last week. What are you talking about? We closed off the lows of the week. We're bull flagging out here. That's a continuation breakout pattern. The concern here for me is not even so much volume. The concern here, I'm giving you guys time to analyze this. All right, time's up. Okay, so the price action on RSI and on Stokes is negative. It's not good. We are making lower highs, and that's okay. But as long as we're not breaking down to new lower lows, it's when that occurs, that's when it becomes a problem. Now, I'm not saying go shorting or selling your shares of Broadridge, right? It could bounce back next week. However, the market sends you signals. And when the market sends you a signal like this, it's telling you, if you're long, and I know at least one member, and I forget who it was, bought this breakout when we were talking about it. If you're still long, let me know. And were I long and understand the charts, I would take these signals as an indicator that I had better raise my stop loss order. Now, where would I place my stop? Right here. Right below the lows of last week at 113.21. A new weekly low gets me out. Okay? Sit on the sidelines, see if the shares rebound. I doubt that they will. The 10-year Treasury note is rallying. That means yields are declining. That's not good for banks. So, Broadridge, we're watching for a breakout here. That's the only reason why I'm talking about it, and why I would buy it is a breakout above this upper band of resistance. I would not buy the shares now, okay? Please. Warning flags are on the track. The market's sending you signals, okay? Please heed those warnings. That's it, folks. Again, please, if you're not a member of the Facebook discussion group, click the link above. Join the group. You'll get the month ahead commentary. I'm going to do it live. If you want to ask questions, you can ask questions. I'm going to try to do that next week. I'll send out an invite. To get the invite, enter your email address on the website. Here's a link above here. Click the link. It'll take you over to the website. Enter your email address anywhere on the website, and we'll send that invite to your inbox. Then you can go over to the Facebook discussion group, get involved there, chat with the community. Then we're going to do a Facebook Live, the month ahead commentary next week. Everybody enjoy the remainder of your day, your weekend. Happy 4th of July holiday for those who are cutting out. And remember, it's going to be a week, trading volume week next week. No big positions, okay? Please, the big guys are going to put the computers in play. They're going to keep the market on the straight and narrow. No big moves next week. That's pretty much a guarantee. Enjoy the remainder of your weekend. Have a profitable trading week. Be well.